Good afternoon. Welcome to ICMA's Brussels office. It feels really good to say that. Here at 56 Avenue des Arts. I'm Andy Hill. I'm co-head of Market Practice and Regulatory Policy at ICMA. And on behalf of ICMA and our co-hosts, I'd like to thank you all for being here today for what is essentially a double launch. First, we're going to launch ICMA's regulatory policy mind map and ecosystem. And secondly, the launch of the promotion of Eurobonds, which we know have been around for a long time, but we also recognize as being, as it says, an essential tool for boosting the SIU. So I'm not going to say too many words. I'm just going to do brief introductions in between each session. But to remind you what those sessions are going to be, we will begin with a keynote from our distinguished guest from the Luxembourg Stock Exchange. My colleague and co-head, Natalie, will present the mind map. And then we will have our Eurobond session with presentations and we hope discussion being led by the two ICSDs, Euroclear and Clearstream. And I'll say a little bit more when we come to introduce them. And then finally, we will have drinks, nibbles, and networking. But to start the event, it's my pleasure to invite Mr. Arnaud Delestienne, who is a member of the Executive Committee of the Luxembourg Stock Exchange, to present a keynote. And it's important to remember that the Luxembourg Stock Exchange is one of the largest listing venues for Eurobonds. So please join me in welcoming Arnaud to the stage.
Thank you so much, Andy. Good afternoon, ladies and gentlemen. I've been given the great honor to deliver the opening address today. And I would like to thank ICMA for the opportunity to set the tone, so to speak, for this conversation on a very important topic and an incredible asset for Europe, namely the Eurobond market. Andy was kind to remind what we do at the Luxembourg Stock Exchange, where of course, listing venue, we're widely known as well for being the home of sustainable finance. But as indeed many of you, we're also known as being the home exchange for Eurobonds. When Italian motorway company Autostrade issued the very first Eurobond in 1963, the Luxembourg Stock Exchange was chosen as the listing venue for this groundbreaking transaction. This was the first page of an outstanding success story for Eurobonds. And many pages have been filled since, uniting the different actors that are present today in this room. In the current geopolitical environment, it is particularly interesting to draw parallels between today and the context in 1963 that led to the creation of the euro-dollar bond instrument, as it was referred to at the time. It's important to remember that it was specific policy developments in the US that led issuers to look for alternative financing options elsewhere. More specifically, it was the introduction of the US interest equalization tax that forced non-US borrowers to turn to new funding sources outside the US, and Europe, at that time, emerged as the natural choice. So we can thank a group of forward-looking capital market professionals in Europe for seizing this unique opportunity to build a new start for European capital markets. Thanks to their ability to think outside the box and work together in the interest of the continent, Europe became the place where companies and government today can easily raise significant levels of debt financing beyond their domestic markets and in the currency of their choice. The name Eurobond creates a lot of confusion. I often find myself trying to explain that no, it's not limited to bonds denominated in euro, or no, it doesn't have to be issued by the EU or by any EU public body. 63, yeah? US dollar. 15 million. 15th of July. And you know what? Eurobond doesn't even have to be issued in Europe. But as they say, everything is in the name. And for me, the denomination Eurobond is fitting because it refers to the leading role that Europe has played in the internationalization of debt capital markets, and the even bigger role that Europe should and could play in this sense now. 60 years ago, developments in the US led Europe to completely reshape its capital markets activity. Today, we're again at a pivotal time in history where the US is moving in a direction that makes both issuers and investors more nervous and open to consider diversification. This geopolitical context is changing, and the consequences of this are hard to predict. Tariffs are on and off. Investors struggle to navigate these uncertainties, while companies and governments need more funding every day to address challenges linked to infrastructures, automation, innovation, climate change, you name it. And in such a context, stability, predictability, and flexibility matter more than ever. Three features that characterize very well the Eurobond market. Its importance for Europe's strategic autonomy is hard to overstate. Today, it represents over 14 trillion of euro equivalent of outstanding issuance, making it the third deepest fixed income market in the world, after the US and China. It is operated from the heart of the EU by globally leading market infrastructures. Clearstream and Euroclear in their role as ICSD, the Luxembourg Stock Exchange in their role as a stock exchange, and the Eurobond market also supported the emergence of large funding programs at supranational levels, helping to deploy and achieve pan-European ambitions. The EIB, the EU, the ESM and the EFSF, the EBRD, the Council of Europe Development Bank, all of them have been using the Eurobond market to deploy their programs. The role of Eurobonds is in fostering cross-border investments and helping issuers diversify their investor base is simply unparalleled. It's a real success story that we should leverage, especially in the current times. And I think it is important here to recognize also the crucial role that ICMA has played and continues to play every day in taking this market forward. We're now at a stage where it becomes clear that Europe needs more strategic autonomy, and we should capitalize on the Eurobond market and the Eurobond product internally to mobilize European savers and make Europe stronger in the long term. Here's where the Saving and Investment Union come into play. As importantly, we should think bigger, and we should see beyond the EU's borders and leverage the Eurobond market to boost Europe's competitiveness and attractiveness on the global stage. The Eurobond market, despite its name, is by design a great global investment and financing gateway, offering yield, liquidity, predictability, stability and transparency, something which will be harder and harder to find elsewhere. As the name of this event makes abundantly clear, Eurobonds are a cornerstones of the SIU. Now it will be up to us and other market professionals to bring both the Eurobonds and the SIU, for that matter, to their real potential. We currently stand at another crossroads, and we are presented with a new opportunity to build a new start for deep and liquid European capital markets. So let Eurobonds be a driver of this new chapter. Thank you, and I look forward to the conversation.
Thank you, Onno. It now gives me great pleasure to invite onto the floor my partner in crime, co-head of market practice and regulatory policy, Natalie Westerbacke.
Well, thank you very much, Andy. This is such a great honor to be presenting here. We just heard from Arnaud. And as Andy said, my name is Natalie Westerbacke, and it is wonderful to have so many people here today at our ICMA office in Brussels. And I would also like to mention that we have a new director who joined us in July, Mr. Torsten Gutke. So it's now the two of us here being based in Brussels. I don't know if you want to quickly come in front and say hello and wave.
Hello, everyone.
So I will be presenting for the next 15 or so, 20 minutes, a mind map. And I have actually brought a copy of it with me, so you don't need to take any notes, but we have designed these posters, which you can take copies of with you later after the event. And the next 50 minutes is two versions. So we also have a little bit smaller one, and in the back you can see a navigation guide. So what I will do now is I will walk you through how we designed this mind map and ecosystem. And we've also created a website where you can download it as a PDF and where you can watch the video that pretty much covers the presentation that I will be giving here right now. So, at the center of this chart, you would see, first of all, the bond life cycle. At the top, you can see the issuance and investing, blue box, and below it's the post-trade. And in the purple square is the market infrastructures. So the bond life cycle starts at the beginning with the primary markets, which is the creation of the bond itself. Then the bond can be created or can be issued by a sovereign investor, by a sovereign issuer, or by a corporate issuer, financial institution issuer. So in that context, it's very important also the underwriting, the auction functions, etc. Next, the bond goes to the secondary markets, where it is traded. So here it can be traded on exchange or bilaterally, but what is very important in that part of the value chain is the repo and collateral activities, because they allow for greater liquidity of the trading in the markets. Then the bond goes to the post-trading process, which is first the clearing. So the clearing can be done centrally or over the counter. And it is pretty much the netting, the calculation of the positions. And once that is completed, and you know there's a big debate on central clearing as well, but most of the bonds in the US particularly are actually traded OTC. Then it goes to the settlement process, which means it's the transfer of the legal title. It sits within the CSDs, which are the National Central Securities Depositories. But obviously the speciality in the Eurobond markets is that we have a duopoly of the two ICSDs, but just for the Eurobond product, which is very important. Now, this, again, bond life cycle sits at the center of this chart of the mind map. On the right side of it, you would see the actors. The actors are pretty much the access, the value chain across different layers. And we've also outlined the various ICMA membership groups and committees where they debate the various policy topics. So it starts at the top with the issuers, which can be sovereigns, it can be corporates, and it can be financial institutions, etc. So here we have, for example, the primary markets forum, which is an event, but we also have the committee, which is run by a couple of colleagues that are also here today in the audience. Then it goes over to the investors, and the investors, they can be, again, called or referred to as pretty much the buy side. So the ICMA buy side is joined in the AMIC, where they develop the policy decisions, but they can be pension funds, they can be central banks, commercial or private banks. So all of these are investors into bonds, followed by the intermediaries. So the intermediaries are pretty much the underwriters and are referred to often as the sell side. So with two arrows, I have also want to show how the investors can access the primary markets, but the investors and the intermediaries mostly access and are active on the secondary markets. It is followed by now pretty much the market infrastructures come into place, the trading, clearing, and settlement. So the trading often takes place on an exchange, but it can also be multilateral trading facilities, and you have the various trading actors. And the trading is the SMPC committee that ICMA runs, where we talk about the key aspects that matter in the secondary markets, followed by the clearing, so the CCPs. In the settlement, we have the CSDs, the two ICSDs. And last but not least, what is very important, in this context are the service providers and the vendors, so the credit rating agencies as well as the data providers and so on. So this pretty much is the ecosystem. But the ecosystem is very much governed by key policy themes. So to the left of this chart, we've outlined, I mean, there's many of them, and by the way, this is just a simplification of the many policy themes. It's not complete, it's not comprehensive, it's just a visualization of some of the key trends that we observe. And in policy, these are, for example, resilience, efficiency, and competitiveness. So resilience often is referred to the characteristic to ensure market stability. Efficiency often is referred to when it comes to low cost and high speed or high volume, but competitiveness is really what matters when it comes to promoting economic growth. So these three themes currently drive a lot of the agenda. Now, next, what is very important in the bond market and its ecosystem is the legal and documentation. So on the PDF version, you can actually access all of these through links, and it'll lead you straight to, for example, the GIMRAS, which is a global standard. As you know, ICMA is pretty much also very acknowledged as a global standard setter in the bond market. And this map is interlinked to these resources. Now, how are these sort of boxes aligned around it? There is a logic to it. Now, on the left, you would see the market practice and regulation team, which is the one Andy and I mostly focus on. And here we have, again, the issuance process, so the primary markets and some of the key themes, the trading and secondary markets, and the repo and collateral. So again, this is just a selection of the current themes that we think are mostly debated, but there's many, many more. But these are top themes in our membership. And this side of it looks pretty much as protecting the market and the actors, so the functioning, the operation side of things. Then we have at the bottom, horizontally, the fintech and digitalization and the sustainable finance, which are our horizontal themes. In fintech and digitalization, we have organized the items under three boxes: the regulatory initiatives, standard and best practices, and public policy. It's too detailed to mention everything here, but one very important initiative in the context of boosting the SIU is the bond data taxonomy that we wanted to mention specifically, which is a template. It's a taxonomy, means it's a classification system of the bond characteristics. So we promote the use of one single template across all of the markets, which would actually reduce the reconciliation efforts and hence reduce the costs. We think that is important to adopt that standard widely if possible. The more they use it, the more beneficial it becomes to all the individual players. Then, in sustainable finance, we have the same three boxes. Many of you will be familiar with these. Just to mention that the ICMA is the secretariat to the Green Bond Principles since 10 years. We just had our 10th anniversary and are very active in that space. Now to the right side, we can see the strategic policy goals. So these are more the macro themes. ICMA, for example, is very involved in capacity building. So we partner with IOSCO to help deliver training courses for frontier and emerging markets, to help them build their capital markets. And for that, we're also very active in the AMCC, which is the IOSCO industry group. And we offer trainings, not just for professional bond traders, but also for people that want to become more familiar with the bond markets, especially in emerging markets. Then we're also very involved with the World Bank initiatives here, internationally. So these activities, while some of the policies seem very EU-focused, they actually dominate the entire global conversation. Now, the next one is capital markets, and this is where we put in the SIU and the asset management. We've outlined here the CMU, the SIU, so the former policy, the successor policy, but some other aspects like the pensions, that is very important. We have here the US. They have a 401k product, which really helped in the United States the retail sector to save for their own retirement, which is something that Europe still is aspiring to build. But that could be like an inspiration as to how the product was designed. Now, the last block comes here, where the Eurobond sits, so the instrument and product types, because this chart is really also aiming to convey basic principles of the bond market and beyond many of the acronyms that especially in policymakers use frequently, but are not necessarily known to people not familiar with the bond market, like UCITS, AIFMDs, ETFs, etc. So it's just interlinked with further documentation in that area. And last but not least, so this is the right side is more reaching the macro objectives. Now, we have in the center the diamond-shaped figure that is the data. So the data is at the core of everything. Important is the data integrity so that it's comparable, the data quality and the terminology. All of these need to be right in order for the market to function well, but also for policies to be adopted in the right way. Then, last but not least, at the very bottom, underpinning the entire market and all policy efforts is education and professional training. So to the left, we've outlined the ICMA training courses, which is more for people that are professional in the bond market. And on the center, you can see a quarterly report. And to the right side is the public policy aspect to investor education. We know that the European Commission has a strong focus on financial literacy and working here, partnering with the OECD. So they've developed some and published some frameworks. But we believe that also investor education of bond issuers and bond investors is essential, particularly bond issuers. What do we mean? The SMEs. Often the SMEs, the small and medium-sized enterprises, are not familiar or aware that they can actually raise capital through issuing bonds. Typically in Europe, as you know, most try to get financing through the banks. But that market is a bit underdeveloped, the bond market in Europe, compared to the US. And last but not least, the bond investors. So here we could think about, for example, IOPA has developed a map of all of the local market initiatives across Europe. And that's something that it could be an inspiration to develop that also for the corporate bond market. Now with that, I pretty much complete this chart. There is on the top right, you would see an email address, which you're welcome to reach out in case you want more information or would like the link and to watch the video and to download it. So that's up there on the right side of this chart. And with that, I would say I would hand over to the next presenters in time. Unless there are any pressing questions right now on the mind map, I think maybe one would be possible to take. Or if not, we can do it at the end of the event. Right. Thank you very much. And with that, I hand over to Andy again.
Thank you, Natalie, for presenting what I think we all agree is an amazing visualization tool. In fact, I hope Natalie doesn't mind me telling everybody this. So the week before last, we happened to be spending the day with IOSCO, as you do. And Natalie presented, or pre-presented, gave a sneak preview of this, and it went down very, very well. In fact, it was described as mind-blowing. So please do pick up a copy. That I think we're going to leave them around at the end. Take two. Take some for your friends and family as well. We now come to the Eurobond segment, and I'm very pleased to invite to present and hopefully also prompt discussion and Q&A. We have Dan Cannell, Chief Business Development Officer, Issuer Services and Primary Markets Euroclear. Guido Villa, Executive Board Member at Clearstream Luxembourg and Head of Eurobond Products at Clearstream. And the two business heads will be joined by their policy heads, Pablo Portugal and Sujata Vershing. So I will kindly invite them to take the floor. Thank you.
Good afternoon, everybody. Thank you, Andy. Yeah, we'll be doing this between the four of us, going a bit back and forth. We'd really like it to be interactive. I really like I think it was you, Peter, who asked the question before, right? So any question, please do ask, because we present all the time. It's nothing special, but I do feel a bit challenged today because I speak for Dan as well, we're used to speaking with people who do this stuff. We are used to people who issue securities, who have specific questions. So we are now talking to an audience which we would like to explain things to, but we're not that used to talking in general terms about what we do. Before we start, and this is well marked here, maybe quick word on the setup here. So you saw there's my colleague Sujata, who's in the Deutsche Börse Group, is the mother company of where I work, Clearstream. So we are colleagues in a sense, but different organizational areas. And then Pablo and Dan both work at Euroclear Bank. Euroclear Bank and Clearstream are competitors. So we work together in this specific field, but overall our organizations are fierce competitors, and there's a significant amount of hatred, I would even say, in other parts of my organization and certainly your organization, and it's positive hatred. It's a competition that is lively and positive, but we do compete, so it's a bit of an unusual setup here. And I think competition is an important word. We just heard about it because the reason we do this here today is that Europe, the Europeans, we're losing, right? And we know that, and you guys here are responsible for figuring out a framework that is better, that enables us to be more competitive again. So we compete with these gentlemen here very fiercely. We like to take a lot of business off them, and they do the same to us, but we do work together to make this market larger and more thriving. So the reason we're here today is that we feel this market is possibly not well enough understood in the spheres that regulate the market. So that's all of you and many others. So we thought in a kind of self-critical way, we probably did a bad job over the last decades, 6 decades to be precise, to explain what we're doing. Because what we'll be looking at today is a very rare example in financial services of a market that is vastly successful. It is based in Europe over there. My friends from Euroclear just down at Place Rogier. We sit in Luxembourg, and from Brussels and Luxembourg, we outcompete the United States and we outcompete the Asian markets. We have clients from Asia, we have clients from the United States, we compete for them. There's issuers from all around the globe who come to our market, and they don't come there because they've been forced by anybody. They come to us because we offer better services than Asians and better services than the United States and Latin America and all this thing. So we've been really bad at explaining this, and we will try today to make this point that I've made in general terms. And it's not self-serving, it's a successful market built by Europeans for the globe, and it outcompetes the rest. So I think we need you to understand what this market does already and how you can help to build on what it does already successfully so that Europe becomes even more successful again in financial markets and beyond. So that's my lengthy kind of emotional introduction speech. What we'll try to do now is to explain to you this rather technical market that we operate, and please do interrupt me because some of this may become complicated, and I think Natalie did a good job at showing you how complex things can be. I'll just talk for 5 more minutes and then we'll swap around a bit because it gets boring to listen to the same guy. We'll talk about the Eurobond market, and here's the theme, based in Europe. You will hear how both Euroclear Bank and us work with a large network of global banks from within and outside Europe to make this market so globally successful. But the base of it, again, is Brussels and it's Luxembourg. So even it's not only Europe, it's the European Europe, if you wish, and if you feel close to that. And it's vibrant and growing and outcompetes other markets. Arnaud started with this, and he did it rightly, I think, because there's a lot of confusion around this term. So Eurobonds, why does that term exist? A little bit of history, and I'll end up at Autostrada, of course, but the Eurobond market is a product of American generosity after World War II. As you all know, because you work in politics, the Marshall Plan funded Europe, my home country, Germany mostly, but all the destroyed parts of Europe in general, with US dollars, because that's their money, to build us up again. So that's a well-known fact that happened during the 50s and during the 60s. The result of this was dollars in large amounts outside the United States of America. Very unusual thing, because normally you go like euros, you find some euros in cash somewhere else, but if you want euros, you go to the ECB. If you want dollars, you go to the Fed. So the currencies all float mainly within their home markets. So here we had a historically unique situation of a very large currency pool of a currency, US dollars, that floated in Europe and started to be traded outside the United States of America, outside the supervision and the time zone of the Federal Reserve Bank, just by banks. So because they had these balances and they moved that cash around. So that's where the term comes from, euro dollars. Dollars that were floating in Europe and not in the United States. And that's where we heard about Autostrade, then a bond market started to exist because people started lending and borrowing that money. Just one step back also on the very brilliant and complex picture that Natalie showed before. What we are talking about here when we say bonds, and I'll go a bit into the term afterwards, but what we're talking about is people borrowing money and lending money, right? This is what we do, and we like to be quite technical about it, and we've got all these terms, but this is someone wants to borrow money, someone has money and lends it. So Autostrade, why did they do this? They did this to build highways in Italy, right? So this is for European citizens and it's local infrastructure that was built with this money. The dollars borrowed were swapped into, well, not euro at the time, it was lira, but that was used to build highways and I think specifically the Ligurian tunnels, which are, most of you have probably been there at some time in a masterwork of European architecture, tunnel, bridge, tunnel, bridge, that was financed with this money. So this is money that is used by Europeans to build infrastructure in Europe, and it's money that is available in an efficient way because of the efficiency of this specific market. So I'll now come to the slide and go a bit deeper on what Arnaud talked about at the beginning. So Eurobonds, I've talked about the origin, are not bonds that are denominated in euro. Historically, they were actually denominated in dollars, and the first Eurobond was a dollar bond. Today, the Eurobond market is a market that has roughly 60 currencies. The euro is the largest, actually, of all the currencies by now. Dollar is second, sterling is third, I think. But there's overall 60 currencies, and people do lend money in Hong Kong dollars. People borrow Canadian dollars. People lend US dollars. I've mentioned that already, Argentinian pesos. So it's a global market where people globally have the ability to invest money and borrow money in all these currencies. So it's a multi-currency market, which also makes it quite unusual. There are others, but there's no market on Earth that has this kind of breadth of currencies that it supports. Second, euro markets. When people, we like to talk about markets because we are working in banking and it's markets, but the term market is not very clearly defined, is it? When people talk about a market, sometimes what they mean is, oh, wow, the German market, and what they refer to is, this is German people doing stuff, so German issuers issuing debt, for example. They may also think about German investors borrowing and lending money to others. So it may be the organizations that participate in the market. In that sense, the Eurobond market is not European, it's global. We've talked about that. You may think about every country has a market. So France has a financial market and they've got financial infrastructure. Some of them are represented here and some of them is represented in the front row. And that infrastructure typically supports that market. In that sense, the Eurobond market is not a domestic market in Europe. It's an international market ran out of Europe. It may sound nuanced, but Belgium does have their own financial markets infrastructure next to Euroclear Bank. And Germany, we run the German market infrastructure next to the Eurobond market. It's separate, it's different. And last but not least, I'm diving a little bit into this bond term. So people, a bond is someone lends money, some other person borrows the money. It's relatively straightforward. If we in banking talk about bonds, we think about a certain duration. So a bond, if you lend someone money for a year, that's not a bond. It's the same thing, but we call it some different name. So the Eurobond market really is still largely a fixed income market, meaning a market where you borrow something that's paid back after some period of time. But it includes a lot of other fixed income instruments than bonds, things like medium-term notes, certificates of deposit, commercial paper, et cetera, et cetera. So it's largely a fixed income market, but there's many other products, so the term bond is not quite correct. Even more confusingly, we also support instruments that are not even fixed income, equity-linked structures and structured notes and various other instruments. I'm not going to confuse you more with that, but I want to impart some knowledge. So yes, the Eurobond market is largely a fixed income market. Yes, it's by far the largest and most successful in Europe, but it does support other fixed income instruments than bonds, and it does also support some instruments that are not even fixed income. I'm too long, am I? You're almost done with my first part. Any questions on this? Comments? I do want to encourage you to say something.
So when you say there's a domestic market, so let's say the U.S. domestic market is the one that you need to register with the SEC and issue a U.S. ISIN, let's say.
Yes, except you can when you get a US ISIN code, then you are in the US domestic market. The SEC would also be responsible if a US issuer decides to issue a Eurobond, which they do all the time. I've just talked about that. But I think your second reflection is totally correct. So,
And in Europe, it will be mostly, the domestic will be mostly for retail.
no. So the domestic markets in Europe, I'll talk, so we run the German market, I'll just randomly talk about that, is the EU domestic markets operate on T2S, which is the European Central Bank Settlement System, but they're all separate on that system. And they include, if I look very high level at the German domestic market, it's the first and foremost German government debt, sadly steeply rising. I mean, from a business perspective, good, but I don't think it's very good for us in Europe. So government debt. The second largest segment in fixed income would be what we call covered bonds, Pfandbriefe, so mortgage-backed bonds. Each of these segments, I think, is roughly 2 trillion euros, very roughly, don't quote those numbers. And then you get some other debt. You get very little corporate debt there. So if German enterprises borrow money, they do use the German domestic market, but rarely. What they do is they issue Eurobonds, because our market is more liquid and therefore it's easier to distribute the debt to investors worldwide, and that has advantages on the interest side. So German market, government debt, Pfandbriefe, and then some corporate debt, but not a lot, and then all the equity. The German equity, so Siemens, BMW, etc.
So why would the German government issue domestically instead of Eurobonds?
It's a question you've got to ask them. It's a question you've got to ask them. What I can describe is the fact. So the governments worldwide use their domestic market to issue debt for historic reasons. Governments do use the Eurobond market for first foreign currency, because the domestic markets will only support euro, but governments do obviously mostly borrow euro because of that's what they need if they're European. But sometimes they need foreign currency money, so then they come to us. And some, I'm not going to quote the specific governments, but there are European governments that issue debt into the Eurobond market. And they do that because these are what I would call slightly more switched on governments. And I think they understand that they get a better deal there. So they put, that's just me saying, these governments put market efficiency over support of the local infrastructure. Yeah. Not sure that answers your question. The vast majority of government debt is in the domestic markets, though. But I get a report every day of the biggest Eurobonds issued. There's one government that issues $1 billion most days. It's right, $1 billion here, $1 billion there. So. Thank you for asking a question. We try to explain stuff. So if anyone else, any reflections, please go ahead. Okay, so a couple of more points on what we think is relevant to know about Eurobonds. I'll just talk to the boxes. So top left, it's the largest market by far in Europe. And if you look at fixed income, it's the third largest worldwide after the United States and China. Arnaud mentioned that. We had a quick reflection with the colleagues from ICMA when we came in here, and we just thought, we don't have the numbers now, but the truth is the largest market in debt is the US, it's then China, and then it's the Eurobond market. The question you just asked is pertinent here. So the US market includes an enormous amount of US domestic government debt, obviously. And the Chinese market is dominated by government players. They are obviously modernizing, but with all their controls around financial markets, there's much less corporate debt. So in terms of corporate debt, as in enterprises borrowing money to, well, build highways in Italy, for example, and banks, who are also a special form of corporate financing themselves, the Eurobond market may be the largest on earth, but maybe the US is still bigger, we don't know. But it's a market that is very heavily used by enterprises, the Eurobond market, as opposed to government. Overall, 14.4 trillion, the number's probably wrong now. We always use these numbers and try to update that with our friends and competitors, but it grows steadily, so we may be at 15 now, but it's a very big market. Dan will have, I think, later some numbers on the other markets, so you see it in comparison. Size matters in financial markets because size translates into liquidity, and liquidity matters because liquidity drives interest rates. So if I want to issue a bond, meaning I want to borrow money, but there's one of you here to buy that bond, I will have to probably pay you a lot of money because you know, well, there's just me. If I try to sell that bond to all of you and you all have money that you really need to invest and otherwise you have no interest, I'm likely to have a significantly better interest rate. That's why the size of the Eurobond market is relevant, and that's why I think there's switched on governments, as I said before, who issue into that market rather than others. There's also a term on robust legal frameworks. I'm not going to dwell on it too much. The legal surroundings of bond issuances are very, very complicated. But what is relevant to say about Eurobonds is this 60-year-old market that has not been created by anyone, really. It's been created by the collective of financial market players that utilize it today. It's been created by the market and for the market, and with Euroclear Bank and us competing. That's why it's successful, because of competition. It's not a government-controlled market. It's a market where the different players work together like we do today, but we also compete. So we'll try to find tonight, after we shake hands, I'll try to develop a product that takes all their business away. And I'm sure you'll do the same then. Now, I'm being a bit funny about it, but I think it's a really important thing for you to take away from a policy-making perspective. The market is successful globally because it competes within Europe already. And that's true for us, but also for the other players that we'll come to. And the legal framework, yes. Yeah, I was just going to come to that. So it's been grown for the market and by the market, and we support over 60 governing laws for Eurobonds. So there's competition tends to develop choice because you compete more effectively when you offer your clients choice. So the robust legal framework refers to first a tested infrastructure based in Brussels and another one in Luxembourg for over 60 years roughly, operating under Belgium law and Luxembourgish law. But it refers to the ability of issuers to issue governing documentation and to contract with their lenders, the people who buy the bonds, in 60 languages. You mentioned English law. It's interesting. English law is the most relevant law that documents Eurobonds, over half, if you look at volume. So English law is decreasing slightly in importance as a consequence of Brexit, I think, but still by far the largest law. That is so because of English law is the law of international trade, so it was chosen by many, many issuers. We actually ran a similar event to what we do today here in Luxembourg yesterday, where we talked about Luxembourgish law as a governing law for Eurobonds, and all EU laws are supported as governing laws as well. But that's the choice of the issuer. So moving down to left bottom, said several times, there's not much more. So in the way the market operates is really Euroclear is here. We are in Luxembourg. We contract with a network of 18 global banks from Europe and from outside Europe to service issuers locally. So while the operation from the investor side is entirely within Europe, we operate together with global banks to have the ability to service issuers from elsewhere. Why do we do that? Well, actually, many reasons, but in a very practical way. I mentioned we have Hong Kong issuers issuing debt into our market. That wouldn't work unless we had people in the local jurisdictions, and some of these global banks have much better and more widely developed network than the relatively small operations that we have. last and not least, trusted, transparent, and efficient. We've been around for 60 years. We've gone through many, many crises. The largest one was the last one with, 13 years ago now, Lehman. There's never been a default of relevance. By default, so neither Euroclear nor us have ever needed help from anyone to run. We've been stable and fluidly operating the market for all this time. That matters in financial markets. People like to go where things have worked for a long while, rather than going to something that looks really nice on paper but hasn't been tried and tested. So I've overstayed my welcome, I think. Dan, it's for you. And any questions and comments again? Oh, yes. Yes. Yeah, well, this is a really, really interesting point. So this is a really good point. So I used the word choice before. No? So when Euroclear and us allow a lot of different jurisdictions, we allow them. But from the perspective of a Hong Kong issuer, this isn't fragmented because they'll just issue under Hong Kong law because that's the only thing they're interested in. And an Italian will issue under Italian law and so forth. You make a really good point in terms of fragmentation, though, but I think fragmentation is a problem when it's forced upon you. Choice is positive. So, Guido, hi, welcome. Here's the coffee shop. 80 types of coffee. That's great. Hi, Guido, welcome to the coffee shop. There's 80 coffees, and now you must choose this, and this, and combine it, and then I'll tell you whether you did the right thing. That's bad. So that's fragmentation. So it's not fragmented in that sense, because we allow these laws to be used under their local jurisdictions and there's no one overseeing it. The problem we have in Europe is the fragmentation across a zone that would like to be a single zone. And you'll be talking about the 28th regime and these things, and that there's cost and friction to everybody who wishes to service Europe, but is confronted with, 27 laws. So a choice of, and so Zuyata and Pablo will talk a bit about this later, the ability to choose something harmonized within Europe, choose, not be forced to, very important, the ability to choose something that services Italy, Germany, and France alike, that would be positive. Not sure that answers your question.
So they have to face first the issue will choose the relevant, the legal regime of where of the country where the issue is based. But from investor point of view, that invest in several
Yes.
bonds from several entities.
Yeah, no, yes, but that's a matter of the investor's policies, right? So if I'm a fund, which are the normal people who hold lots of different bonds, and I would like to have exposure to the Hong Kong market, which I've overused as an example now, then I've got to deal with Hong Kong law very likely. So it is fragmented, but it's a reality. So what we do with our services, if you didn't have the Eurobond market, what you'd have to do is deal with Hong Kong law, which you have to do anyway, because you've made the choice to invest in Hong Kong issued debt. But you'd also have to deal now with domestic infrastructure, domestic rules, and you would have to contract under Hong Kong law to buy the bond, which you don't have to do with us. You contract under Luxembourg law or Belgium law with us. But in the case of a default or some dramatic event happening to the bond, then you have contracted with the issuer under their local law. So we remove a little bit of fragmentation, but I do agree with you, the fragmentation of global laws remains. I think your reflection is interesting, and I said it before, so from a European perspective, if I'm a investor who invests in EU bonds, and I like exposure to Greece and France and Denmark, right? And today I have to deal with all these different laws. So if we had, for the issuers, the ability to say, I choose a law that is harmonized, in theory, you would remove friction and cost for the investor, because they now have only one law. But we in Europe can have that ambition. I mean, for us, the ambition to remove Hong Kong law from the table, I think, is not very realistic, right? Because I think people in Beijing will not agree. if you ask a question, then, so he's been running a lot of the Eurobond market infrastructure for a long while.
Who's your supervisor? Who's your supervisor? Because you're Luxembourg, he is Brussels, you're 60 countries, 60 currencies.
Yeah,
so who supervises you?
I was just going to name my boss to you, but so it's the CSSF for us, la Commission de surveillance du secteur financier, and it's the Banque Nationale de Belgique for Euroclear. We also get, because this is Europe, we get a college of supervisors also, so we get some exposure to others because of our mother company.
So it's different than SWIFT, or is it this kind of similar structure of supervision? SWIFT is the main supervisor is the National Bank of Belgium, but with with the ECB and the Fed and everybody around. So that's not the case for Eurobonds.
No. So we at the moment there's complexities. We are regulated by the CSSF. I'm just going to talk about us for a moment, but there's someone else, but it's similar. So and that's it. Then second, we, Clearstream Banking in Luxembourg, SA, are part of a larger group. So this title you've seen is the Deutsche Börse Group, and also technically my mother company is something between the Deutsche Börse and Clearstream, which is based in Germany. And we have a German sister company, so we have some exposure to the BaFin, which is the German regulator, but they're not our head regulator. But they do look at stuff we do because of links within my corporate with Germany. And then third, the ECB takes a look because we are something called an OSI, other systemically important enterprise, other important, not systemically important, but because of the relevance of what we do to the market, there's a little bit of ECB look on it. But now there's obviously discussion, which is probably what you're alluding to, so ESMA doesn't regulate us.
But can I ask a follow-up, Moritz, working for BVI, German Asset Management? I mean, you have a name tag, Clearstream Banking. So what about the SSM? Aren't you supervised also, or are you not systemic relevant? Or you don't have a banking license, even though it's called Clearstream Banking? Thank you.
No, we do have a banking license in Luxembourg, and so the Banque Centrale de Luxembourg, in that sense, plays also a role, but they're not the regulator, they're an overseer for our banking license business. And what was the other part of your question?
But then it should go to SSM, right?
Yes, so we are systemically important in Luxembourg, but we are in OSSM, so we do get that kind of supervision. So it's not, we don't fall under direct ECB supervision. We're getting very, very technical, but does that answer your question? We may fall at some point, but that's not our call. It's the call of the regulator who they regulate.
And that's the hot topic.
It's an interesting topic, yes. Anyone else? Otherwise, I'll hand it to Dan, because at some point you want to get a drink here, right?
Thank you, sir. That's yours. Thank you to my friendly competitor. So I'm going to just add my thanks to ICMA. Thank you full for you organizing this and inviting us. Very much appreciated. So I'm going to continue sort of a brief history. Competition really does become the theme here. This is really why this market has continued to evolve over 60 years. We have not stagnated and just remained with a single currency, single product. We've continued to try to evolve this market as we've continued. And just as we heard, 1963, the first Eurobond. I'm not going to cover all of these, but it evolved into, Sedel and the Morgan Guarantee Euroclear entity evolving into what is today Clearstream and Euroclear Bank. Floating rate notes evolved. We then had the interoperable link between the two ICSDs, which we now affectionately call the bridge, which is the linkage between Euroclear and Clearstream that allows sort of cross-border movements between our respective customers. The first Eurobond pot deal, which is now a very, very common type of syndicated distribution process that is followed in the Eurobond market. And we've continued we developed EPIM back in the early 2000s. That was really a reaction to the request from the market to develop a automated ICE and generation product specifically for commercial paper and certificates of deposit, to allow the market to evolve to a T+0 or T+1 type environment for those types of asset classes. As part of the ECB, in terms of Eurosystem eligibility, we created the new global note in 2006 and the new safekeeping structure in 2010. Thank you, sir. Which was to meet the requirements of the ECB and to continue to have these Euro bond products eligible as collateral. The enhanced bridge, we also then re-looked at the syndicated closing model. That was largely driven again by market demand to look at how we can make the syndicated distributions much more efficient, given the number and the size of the tickets and the deals, and how to handle those in a much more efficient manner. And this hasn't stopped. So e-global note was a concept we explored back in 2024, which was to try to digitalize the issuance process. And that sort of laid the foundation for a number of new initiatives that, again, jointly with our partners at Clearstream, we are trying to work with the market to develop more digitalized flows in the issuance process, which is supported by a foundation of harmonized and standardized taxonomy. So competition keeps us moving and evolving, and one of the key things we try to say about the Eurobond market is that it remains fit for purpose. It's been designed for the global borrowers, global investors, and it's been designed to continue to evolve and meet those needs in today's capital markets and for the future. So we heard some statistics. Roughly 450,000 securities issued annually. So the Eurobond terminology, as you heard, is used really as a holistic terminology. It covers a large number of different asset classes that are issued in this ICSD model, as we call it. Guido touched on a number of them, but they also encompass the more innovative products that have started to evolve in the capital markets, supporting the sustainable finance, green financing products, Islamic financing, just to name a few. And so we continue to evolve this in supporting the new products and the new types of innovative funding vehicles that come to market, be that even now looking into digitalization, tokenization, DLT issuance. We're continuing to always try to serve the needs of the market. Issuers are our key drivers of this. We have well over 12,000 issuers that have issued these types of products in the Eurobond model. And those issuers located in between 120 and 130 different legal jurisdictions around the globe. The currencies, again, as Guido touched on, are very, very important. We have two classifications of currencies, which makes this model quite unique. We have full settlement and denomination. And I'll touch on the full settlement does exactly what it says on the label. You can issue the product in that currency, you can settle against that currency, you can receive your asset servicing, income, redemption payments, corporate action payments against that currency. Now, what we developed was a second classification of currency category, which we call denomination currencies. And these are really driven by the super multilateral banks, who use Eurobonds to facilitate and bring visibility to capital market development programs, be that developing the capital markets in a local frontier or emerging market economy, or developing an infrastructure project to help or sort of a developing nation evolve more effectively. And so they will use these denomination currencies to fund a Eurobond. So they will issue this Eurobond denominated in one of these denomination currencies, but all payments and settlement will be done in one of the full settlement currencies. So what does that bring in terms of value? One, the Eurobond model being used allows access to all of the clients of both Euroclear and Clearstream, which is thousands based globally. And secondly, it allows the investors to have some currency exposure to this emerging market currency. It gives them visibility because normally these types of products coming to market will get visibility in social media or the Financial Times. So it brings the visibility they seek to the product and to the project that they're working on. And that we have found is very important to continue to support. Governing laws, we covered that, 55 different governing laws, the majority being issued under the UK law. So the the success story around the Eurobond model. As we see, Eurobonds 14.4, 14.6 trillion outstanding, the largest fixed income segment in Europe, and the next largest behind that is France, followed closely behind by the UK. Even if you add those two markets together, it still isn't as large as the current Eurobond market. We have witnessed year-on-year growth of between 4 and 5%, which is already a remarkable achievement in the current capital markets. So since 2023 through to more or less half year of 2025, we've seen a 12% growth in terms of the issue amounts that have been done through this model. So we touched on a truly global solution. It is just that. We have investors and issuers based around the world. Predominantly, you have the issuers largely based in the UK, but this map is not covering everything. There are many markets here that are not covered simply because they're small in terms of size, but you have, quite a diverse amount of issuance coming from not just European countries, but also from the Cayman Islands, which is very favorable for many special purpose vehicles, UAE, etc. So it really does show a truly international marketplace. And the last one for me before I hand back is the ecosystem that we have. So we are just part of that ecosystem, and what we do work with is the providers of services in the primary market. It's not just the borrowers themselves, and it's not just the investors, but it is fundamental that we have a very solid relationship and very good interactions, not just with the law firms who are documenting the terms and conditions of these products, the bankers who are, the innovative minds behind the creation of new product types, but also the corporate trust banks, which Guido touched on, not just acting as a paying agent, but also providing the custodial services on behalf of the ICSDs. And it's also fundamental that we interact with trade associations such as ICMA, which are fundamental in developing the capital markets that we serve. So this network of banks that we have used is fundamental to servicing the flow of information, not just in the issuance process, but in the post-issuance process. And so we have, as we heard, we have a network of banks both in Europe, but also in Asia that are there to help service the issuers and the investors in those respective time zones. And of course, as I mentioned, we have the bridge, which is the interoperable linkage between the two ICSDs. Fine, that concludes for me before I hand back to you. Any questions?
Yeah, this is a burning question. You heard about shortening settlement cycles, right? T+1. Are you agnostic as ICSDs because you have so many currencies, so many jurisdictions? Do you care?
Do we care? So I was involved. We have been involved in the T+1 discussions in the US. One thing that, and Rory, this will resonate with you. So one thing that we did encounter with the US in the DTC was very late in the process, they realized they hadn't taken into consideration the primary market and what the impact would be. Now, the reality is you can't underwrite a deal in one day. You cannot do everything required for a syndicated deal in a T+1 environment. You can do certain products, commercial paper, it's possible, T+1, T+0, but a true syndicated deal and having the roadshow, etc., it's impossible to do. So hence the reason why in the US you had a carve out. And so the primary market became elective, if I can use that word. Elective in the sense that if the issuer and the investors and all of the ecosystem supporting that issuance agreed to do a T+1, then yes, go ahead and please do so. But if they chose to do T+3, T+5, then that was also going to be acceptable. And so that same concept we have tried to mirror into feeding into Andrew Douglas and the UK Accelerated Task Force, feeding into the European Task Force, trying to feed into the Swiss because they have their own respective task force, but trying to maintain that same principle that the carve-out of the primary market should be a fundamental element that retains to give optionality to the participants. But yes, it is very important, not just primary, but also secondary. Yes, sir. Oh, sorry.
Managing some dollar funds, it's quite confusing to do T+1 for domestic, T+2 for Eurobonds. Why didn't Eurobonds move to T+1?
Well, in theory, you can. You can do T+0 for certain product types.
No, as a
But-
standard, I mean.
As a standard, it's really the standard is set by the parties actually executing the bilateral trades. They're the ones who decide which sort of time frame they want to execute in. But I agree, there is no real standardization until very recently with that move to try to create a standardization. But that's a little bit more focused on the secondary post-issuance rather than the pre-issuance. Good. You got more questions, Guido, so may I hand back to you? Thank you, sir.
Thank you. Yeah, I thought I start, so I won't be as long as before, so I see worried faces. I thought I'd start with an anecdote for, which those not in the know may appreciate. So we've got this thing that Dan called the interoperable link, which is a technical term for what people in the market where we operate call the bridge. And the bridge links the two competing organizations here in Brussels and us in Luxembourg, so that our clients, investors who've bought bonds, or Euroclear's clients who've bought bonds, can trade with one another. Without that link, we would be kind of stuck in islands, and that wouldn't work for the market because our clients sell bonds to Euroclear's clients, and Euroclear's clients sell and buy to our clients. Now, that's simple and obvious. When the market was invented, everything was still paper-based, right? And if I hold, we've got a couple of thousand of clients, so does Euroclear. So if our clients sell bonds to Euroclear clients in aggregate, so overall, there's more bonds moving from my side of that bridge to Euroclear, we owe them bonds now, right? And we're quite serious about this stuff. So these bonds now have to move from where I hold them to where Euroclear holds them. And these were paper certificates. So when the market started, we employ what we call depositories for holding that piece of paper, which is the bond. And Euroclear has their depository, so do we. And the initial two big depositories for the Euro market are both in Luxembourg. And I crossed that bridge this morning. Because it's an actual bridge, it exists. So Euroclear, at the time, it was BCE, I think, no, les Banques et Caisses d'Épargne de l'État à Luxembourg. So that was Euroclear's depository. So all bonds that Euroclear holds for their clients are in that bank. And that sits on one side of a bridge in Luxembourg. And on the other side was our depository, KBL, Kreditbank Luxembourg. So when we owed bonds to Euroclear, at the end of the day, someone would cross that bridge with the bonds and move it over to Euroclear's depository. So it was an actual physical move of paper once per day across the Pont Adolphe, which is that bridge, a beautiful bridge built around the 19th century. And I crossed it this morning when I moved from my office, which is on the Kirchberg of Luxembourg, to the Gare Centrale de Luxembourg, to make it to the Gare de Luxembourg à Bruxelles. to get there first, I had to cross this, the Pont Adolphe. So if you want to give an anecdote, this is not relevant to understand markets. It's cool, though, and it illustrates how it works. And it still works that way today, if you wish, except now it's electronic, so it's not that easy to illustrate. But the Pont Adolphe, beautiful bridge in Luxembourg, links on the one side the BCE, which is still there, beautiful building, by the way, the Luxembourgish State Bank. And the KBL is not on that other side anymore, and this has obviously changed corporate form. The bridge, Le Pont Adolphe. A few more things on the market. I think most of these things, luckily, we've touched on, so I should be a bit quicker. This is designed to hand it over to Pablo and Suyata, who want to talk a little bit about, from the public policy perspective, what could and how Eurobonds can be used. So I want to move a little bit away from the technicalities and more into what does the market do for people in Europe, and specifically investors and issuers in Europe. So I'm just going through that slide on the top left. So issuers, these are people who want to borrow money, right? And again, we talked about Autostrade, who builds highways. We actually were at a different event in Milan last week, and we had a person speak who works at A2A, which is an Italian infrastructure firm, just like Autostrade, except they build electricity networks. They issue Eurobonds, and what they do is they build then electricity networks for Italy so that the power is better distributed, et cetera, et cetera. And it's random that it's two Italian issuers, but I think it's always important to not talk about these technical terms. These are European enterprises who borrow money to invest it into our continent, right? So issuers have a broad and global investor base. I used that example before. If there's a lot of people you can sell something to, you are likely to sell it more cheaply. And selling debt cheaply means a low interest rate, a low financing cost for the issuer. So the Eurobond market has several thousand investors who hold accounts directly at Euroclear Bank or us. Across Europe, every single relevant European bank has an account, but every single global bank has an account. There isn't a relevant bank in any country on this planet that doesn't hold an account with us. It's a little bit hyperbole, you'll probably find an exception, but it is truly the case that you will not find sophisticated financial markets with players who do not either contract with Euroclear or with us. So for issuers, that's great, because you can sell your bonds straight into all these people, and therefore you pay less money when you when the interest rate is set. Second, easy access to non-domestic funding. It's a variation of this, but let me talk about two things. So one is this breadth of investors. If I go into a domestic market, I'm primarily facing domestic investors, so that's just less people. Less means likely less good financing. If I go to the globe, I have more, and it's just more. But there's also the currency dimension. We just talked about Autostrade building highways in Italy, but borrowing dollars. Why would they do that? They don't pay people in dollar, right? They paid the people who built the Ligurian tunnels and bridges were not paid in dollars, they were paid in lira. And these were Italian firms. So people do that because apparently the interest rate at the time for the euro dollars that were floating here was lower than for lira. So they borrow dollars, they swap that into their domestic currency, and then have a better interest rate again. So the access to international funding means that you also have a much broader range of currencies you can borrow in, and that is independent of the currency you eventually use because of the swap market that sorts that problem out. So easy access to non-domestic funding gives you more investors and also access to currencies that you would not have if you just issued within some European domestic infrastructure. We then have the extensive currency options that I essentially just talked about, 60 currencies worldwide. Lots of every single liquid currency is in our system. The one big currency, I'm not going to go into the Chinese market, so we do support Chinese currency, but you know that there's currency controls around the mainland kind of part of the currency, so that's a bit more difficult. But there isn't a relevant currency from Asia, from the Americas, or from Europe that we don't support. And last but not least, funding diversification. If you want to borrow money, that's great. I mean, I borrow 10 euros from you, fine. So I borrow another 10, I borrow 1,000. At some point, that person who's lent me all that money is going to stop lending to me because I owe them a lot of money already, right? So here you have access to a lot of different investors. So you have the ability to raise large amounts of capital from a broad investor base. And that is important because single investors will not lend you enormous amounts of money because there's a credit problem with that, obviously, if you have single exposure to just one issuer. So the Eurobond market for issuers does a lot of things, and that's why issuers worldwide come to us. And again, I would say that I like that as an important fact. They come to the Eurobond market because it serves their needs. Nobody forces them to issue a Eurobond. They can all go tomorrow and issue elsewhere. They don't, because they like what we do. Then the other side of the market, investors. So that's SIU stuff, and we'll hear from Pablo and Suyata about this as well. So we've got a problem in Europe. We've got lots of problems. One is that all of our cash sits in bank accounts, and none of us get anyone. None of us. Some of us do, but a lot of people in Europe don't get their savings remunerated. Right? Low interest rates, pension problem. It just doesn't work very well. So here we have the ability for investors from Europe to use European infrastructure to invest in European instruments. So Autostrade per l'Italia, borrowing money. People can invest in that and get interest on it without a bank intermediary. So this is bond markets. But also you have the ability as an investor to diversify your portfolio and invest in other markets that in particular moments in time may be useful because of the diversification of your portfolio, always important, diversification, key concept of financial markets, of course, but simply also because of interest rates elsewhere may at times be more attractive. So you can have a exposure customization, so that's a bit more of a technical term. I'm less thinking of a retail investor now, but your exposures to different people that you lend money to can be engineered in a lot of detail via our systems, simply because there are a lot of different issuers that are available to buy. Also because of some of the specific services that both Euroclear Bank and we offer to allow certain automations of exposures in our system. So that helps our investor client base to manage their risk profiles that they manage. We don't manage their risk. Banks manage their own risk. But we help them with technical tools to manage their risks more effectively. We do that. No domestic market on earth does anything similar except the US market to an extent. Two more, access to highly liquid financing. It's a variation of something I talked about at the beginning. Liquidity in financial markets doesn't matter most of the time till it matters. And what I mean with that is, if I buy a bond, I don't really care whether there's loads of bonds, as long as there are the bonds that I want to buy, fine, I buy the bond, right? So if I sell a bond, I don't really care about whether there's 1,000 people who want to buy that bond. What I need is just one buyer to buy my bond. That's it. And that's what I mean with saying it doesn't really matter in normal business till it matters. When I must sell that bond because of there's a credit problem, either myself, I need that money now, I need cash instead of the bond, or there's something that I perceive is wrong with the person that I have lent the money to, then liquidity matters a lot, because at that particular moment in time, I'm likely to be not the only person who wants to sell the bond. So having a large pool of buyers available for me to liquidate, to sell quickly my asset is really important, and is really what professional financial market players enormously value, because that's the lackmus test for security in times of market stress, if you wish. So market depth and liquidity is a very important dimension, not in the course of normal business, but when it matters, it really matters. And last but not least, and it's all linked in a sense, is the security of a deep secondary market. So we talked about the issuance side of this a lot, because this is the business we all work in here. We have an enormous market of secondary trading in the two ICSDs. I quote our number. The high level number my boss and CEO always quotes is, we turn over the gross national product of Luxembourg, where we are based, each day several times. It's roughly 6 to 7 times. And that just shows you how one organization within one country drives an enormous amount of trading around. So a lot of this is buying and selling. Even more of this is financing security, so people borrowing and lending them. But we turn that around every day and nobody notices. You never notice that, right? We do that, Euroclear does the same. I don't know the exact figures here. It's an enormous scale and enormously liquid market that runs permanently, and people can tap into it as they wish. That's what people like. So before we give it to our specialists for public policy, we'll have a much more close engagement with you. I'll just summarize on the bottom. So we run a market that we think is good for Europe. We think it's a market that's good for European issuers who can easily borrow money at good rates. It's good for European investors because it allows direct access in our time zone under our regulation to a global market for fixed income and other securities. There's a very wide range of choices, a broad range of level regimes, and an enormous choice of asset classes in this market. So we like what we do. We're employed to do this, but we think as those who run European policy, I think it's important that we, as European citizens, understand we've got something that works. It's successful. It's by no means perfect, as everything. It's needs improvement every day, but you've got something at your hands that we think is a great basis for what we want to jointly achieve within the context of the SIU. With that, I pause again, give you the opportunity to ask more questions. Not to you, also to you. Gottfried knows so much about this market. So it's a bit... anyone else who knows a lot about the market already, like Gottfried, or anyone else?
So just understand, your profit is based on those transactions, right? Secondary market transactions.
So our own earnings, I'm not going to go into trade secrets, but I think the mechanics, so we charge our... we hardly charge any fees on the issuance side of the business. So we talked a lot about issuers, but they hardly pay. Some exceptions apply, but it's very small percentages of what we do. We charge investors for holding accounts with us. So if you were, and you can't because you're a person, but the financial market institutions that hold accounts with us pay us for holding assets with us. That's the biggest part of our fees, very roughly, maybe two-thirds or something like that. I mean, no trade secrets here. We are under competition law controls, but that's the biggest chunk traditionally. So I hold, I don't know, 1 billion of security for you, and then I'll charge you money for that.
As a depository or
depository charge? Yes, exactly. And the other part is other services like settlement, so the transfer of securities, but also tools that I alluded to before, securities financing and related. So that's where we make our revenue, and then our profit is that revenue minus our cost.
Yeah.
Yes.
So if I want to issue a bond, what I need to do? I go to one of these bank that is there.
But if you personally, I hope, don't want to issue a bond, but if you, yeah, so yeah, to issue a bond, you need a couple of, if it's a real bond, so something relatively long dated, what you need a bank first, because I mean, assume you're not a bank. Looking at you, if you're not a bank, so you will avail yourself of the services of a bank because you need someone to sell the bond for you. No? So we talked about Autostrade before. They had a consortium of banks selling the bond at the time. The one that still exists is Deutsche Bank. All the others have been absorbed in other ways. But so you go to bankers who then help you sell the bond. That's one thing. So that's an investment bank. You then need lawyers because you want to be sure that you draft your documentation in such a way that you're not taken for a ride. The bankers will help you with that choice, but you need a law firm. And then you're, as an issuer, pretty much done. And what will happen here, we talked about our network of banks. So this may or may not be the same as the investment bank, but there will be processing banks behind to help with the technical parts of the issuance. But as an issuer, you don't necessarily get that exposed to that. Does that answer your question?
Yes, pretty much. And it would take how much time? Like a few months, I could imagine. From like, okay, I get this investment bank, and the whole process would take a few months, right?
If you issue for the very first time, yes.
Yes, it's the first
so
time.
I'm almost tempted to kind of go to. We have some of our ICMA colleagues here, and Rari maybe. So we do the plumbing and the backside. So I know what I've just said, but Rory knows much better.
Yeah. So I mean, just in terms of once you need to get some of the structure in place, and that's something that you're not going to be doing spontaneously. If you're a new issuer, you need to be learnt by the market. So that does take a bit of time. But most issuers by number are established issuers. The more frequent you are, you've got the structure already in place, and we now have this concept of programs, issuance programs, which issuers maintain year in, year out. And that means that most well-known issuers, that are relatively frequently known by the investors, they can literally call the banks out first thing in the morning saying, we're bidding a deal on screens now. They will price that transaction in the morning, allocate it by mid-afternoon, and then your settlement T plus 5, broadly. So it's what we do.
There's someone, I'm standing in the light now.
For years, we've been talking about Capital Markets Union. We may have rebranded it, but we're still talking about it. When I look at the Eurobond market, at least from the perspective of non-sovereign bonds, don't we already have it? Would you agree?
In what's, do we have the
No, from the perspective of the bond market, haven't we always had a capital markets union?
It's actually a really neat way of making points that I try to make. So from a technical perspective, I think you're totally right. So between Euroclear and us, technically, Europe has a single market operated in two infrastructures linked by the Pont Adolphe, the bridge. And technically speaking, we have that market unified, and you could call that the CMU as far as securities issuance and settlement and financing goes. Yeah. I mean, but I would add, the two things I'd add is first, it's not even a European market, we have a global market. And so it's more than what Europe wants to achieve. And also that technically harmonized market is subject to fragmented regulation and supervision, and we touched upon that before. But yes, technically we have that single market, which is why we explained this here. We think we have a great basis for Europe to say we have something that is successful and large, and we should nourish it and build it out. And again, there's much we can improve, right? The regulatory frameworks. We talked about supervision. We're not going to talk more about supervision, by the way. But so yeah. I think does that answer your question, Andy?
It does.
Yeah.
Thank you.
No, thank you. Anyone else? Okay.
Yes, before you said that competition has been very beneficial in this sector between you and your competitor, but it seems to me it's mainly a duopoly. I'm wondering whether by having other entities joining you and competing against you, the market will become even more efficient.
Yeah, I mean, first, it hasn't been beneficial for me. I think I would be significantly richer, and my firm would be richer if we operated a monopoly. We don't. But so as an employee, you want to work at a monopoly, quite frankly, because that makes the employees and the firm rich. As a European citizen, I think it's successful because we compete. Now, I don't know whether it would be more successful. In a sense, we run a duopoly, right? We don't, and I'll talk about it a little bit, but duopolies are very, very fierce competition because every day we look at what they do and they do the same. And when they do press releases, my CEO comes down on me and goes, why do they do that? And so sometimes competition between two organizations can be more intense than between more, but your point generally is well made. We do compete also collectively against other markets worldwide, though, right? So US issuers every day make choices about where they issue US debt, and a lot of it is issued into the United States. A lot of it is issued into us, and we try every day very hard to get more of it coming our way by offering services and solutions that are appealing. We also compete, in a sense, with ourselves. So we run the German domestic market. Euroclear runs many markets, France being the largest. And the issuers in Germany, if Siemens issues a bond, they have the choice to issue in their German domestic market. They can issue it with us. They can also go to the United States, and they do if they're large corporates, right? So there's also competition beyond just the two of us, but it's not exactly like for like then. But by and large, overall, I think duopoly competition is quite fierce because you quite kind of exactly know what your competitor does. But also there's the broader global scope because, again, it's a global market and we compete globally with... We get a lot of competition from what's called the CMU now, which is the central monetary unit, I think, which is the domestic infrastructure in Hong Kong. And because of the Chinese market growing, they try quite hard to entice issuers to issue renminbi, so yuan debt there. So we compete with them in a sense. I should hand it over because we do want you for drinks, and I think I'll bore the hell out of you otherwise. Pablo, you start. Thank you.
Thank you very much. So what are some of the benefits, I think we've already touched on them, in terms of the SIU that we have been discussing for some time? Let's put it there. First of all, I mean, clearly, we are talking about a European success story here. And we often say, for example, that the UCITS framework has been one of Europe's success stories because it's become a global reference. And I think here we're talking about, another success story because we're talking about a market, global, regulated out of Europe. In this case, it's a market-driven initiative. It's not like UCITS coming from regulation, but it's a market-driven innovation that has led to this success story in Europe. So what are the benefits that we see in terms of the SIU agenda? One is in integration, and we've already touched on this. And to your question, Andy, it's very relevant because the last couple of years we've heard a lot about the fragmentation of the post-trading sector. It's been a big topic of discussion, but we need to nuance that a little bit. It depends on the market that we're talking about. Depends on the asset class. That is to a great extent true for equities. We have fragmentation in equities. We need to work on that, and many organizations are working on mitigating that. But here we have an integrated fixed income market at the heart of Europe. So it's a market where we have the benefit of integration coming from competition and interoperability. I think that's the key kind of combination here that we need in terms of a market solution. So it's important to remember that. What are the sort of positives here in terms of EU competitiveness? Well, this market helps to promote the international use of the euro. For example, we have many non-euro area and non-EU issuers that come to Europe to issue in Eurobonds. And in fact, I'm going to use the sort of equities comparison again. In equities, we have a problem that many European issuers go to the US because they find the liquidity there, they find the depth of capital there. But here we have the opposite dynamic. The world comes to Europe to issue because we provide the integrated infrastructure that has developed globally. So that's another kind of way in which this product contributes to the SIU. And as has already been mentioned, we're talking about a European infrastructure regulated in Europe, subject to European standards, infrastructures that operate globally, but under European regulation and supervision. And this element of resilience is extremely important. I mean, you don't need to tell us how tough CSDR, DORA, and the rest of the EU rulebook are. They're very tough, but that comes with being a systemic global player. What are some of the benefits for issuers in sort of concrete terms? As I mentioned earlier, it's the fact that they can raise capital in Europe, access a broad investor base within Europe without needing to go to a third country. They have flexibility in terms of legal frameworks, so it's a very kind of accommodating product for different types of issuers. Worth mentioning here the role that, for example, Eurobonds are playing in the green transition. As we know, a lot of the financing for ESG projects has to come from the bond markets, and we see that Eurobonds are a big tool used globally for green, social, sustainability-linked bonds, growing market. And that's being used by multinational agencies, corporates, etc. So, an important role there, and for investors, clearly it gives the possibility to have a sort of a consolidated infrastructure where there's, as mentioned earlier, competition and interoperability, where to invest in a broad range of instruments, so it's also a benefit for global players and investors. What are some of the next steps? I mean, clearly, a lot falls on the private sector to continue to develop this mechanism, to continue to innovate, and I mean, Guido and Dan spoke about the fact that it's no longer just about bonds. There are other instruments being accommodated in the Eurobond concept. Digitalization is also very important, and this leads me also to the question: what can the EU do also to give some support? And I think Sujata will talk a bit about that. But maybe I'll pause there in terms of questions related to the SIU and or comments.
So maybe not related to SIU, but use of blockchain to do all this. Is that possible?
It's possible. I think it's a nascent market. You already see issuances of digital native bonds in the infrastructure. I think that will be an area of growth, and I think here what Sujata is going to talk about, the 28th regime, could play a role in this. So I leave that to her. But definitely, I mean, to the extent that DLT and blockchain, become more mainstream and benefit from wider adoption, I think I would expect the Eurobond infrastructure to follow. Importantly, I mean, the take-up of DLT, of course, the infrastructure is key to that, but it depends on the entire ecosystem moving to that, issuers, investors. So a key element here will be interoperability, because it's important that you have to allow DLT to scale, interoperability between DLT platforms, but also with the so-called legacy. I mean, we call it legacy, the traditional systems, but it's not legacy yet. I mean, it's the way world is, and it's going to be for a while. But because as Guido explained, the liquidity today, for example, when you look at the Eurobond market, sits in these traditional systems of the ICSDs. In the future, it may move to the DLT platforms. That may happen, but I would think, this is just personal view, you will need a number of years of interoperability until that transition takes place. Please.
Thank you. Maybe this is more of a side question, but how relevant would you think that the 28th company law regime that has been discussed for innovative companies be relevant to achieving the SIU, especially more for the digital aspects of this, because there have been discussion on the topic. So I would be interested in knowing your take on this. Thank you.
I will leave that one to Sujata, which is a very good question. So that we'll cover in the next presenter. Shall we move to that? Anything else?
Maybe one question. I now get some understanding about some interconnections. How much would the trust into the system be interfered if we would start to use the Russian assets, which are in the system, as I understand?
Yeah, I not prepared to comment on that question. Yeah. So I leave it. I leave it there. You have some public statements from Euroclear on that topic, so I would leave it at that. But I would say one thing. I mean, the colleagues mentioned many banks that are clients of the ICSDs that we work with. That is also true for central banks. So you mentioned one of them. There's over 100, at least talking about Euroclear, that have assets custodied there and relationships with us as clients. So yeah, we also play a big role here with the central bank community. Okay. Hand over to Sujata.
Yeah, thank you very much. So let me allow you to take to a journey which is more visionary, because we are at the beginning with the 28 regime. We have talked about fragmentation already. We have the national securities law, which is different from member state to member state. We have the different insolvency laws. Obviously, tax is also, but that I wouldn't touch. I would really stay to the securities law regime, which fragments Europe, where there is so much more efficiency and cost gainings if it would be more simpler and you wouldn't need this kind of legal opinions for each country where you operate the same business. So therefore, we thought promoting the 28 regime. We heard already on the fintech side there is first proposals from the European Commission. There is currently a call for evidence on that topic. And as far as we understood, Commissioner Albuquerque, that is a kind of step-by-step approach to go towards the 28 regime, starting in small pieces, so to say, with the fintechs, but then in our vision, ideally also tackling parts of the securities law and not to be kind of overwhelmed because we have the harmonization discussion since 30 years, 20 years, and we're not so much successful with regard to negotiating in different national member states. So therefore, our attempt would be why we should make that attempt to develop a 28 regime. It would boost EU competitiveness. It would make capital markets more efficient. It would address the topic of fragmentation and also the cost topic. It would promote innovation. We have got the question on the DLT side and on the digital developments. As things go more digital, it is in our view helpful to address the legal uncertainty issues to really get the speed out of the new technologies, which is a benefit out of that. Capability of Eurobonds for financing the European future. We heard about green and ESG developments, but also on the digital side, and nowadays always also on the defense side. So we need this boost, so to say. How a 28 regime for securities could look like, in our view, we should start with the fixed income debt securities, Eurobonds, that, as you heard, it's a limited, and it's not a limited, it's a global market, but it's two actors. We can start there easily. We can find the common data points. We have seen in Germany, I'm also based in Frankfurt, therefore allow me to have that German example, with the electronic securities law, which was started with the bonds market, and then at a later stage when that happened and it was successful, fixed income and funds and equities were came in at a later stage. So for us, a starting point and then develop it further. Dematerialized securities to get the benefits of digitalization, state-of-the-art technology. It is important to get rid of paper, so we need to dematerialize and make issuance digital, and therefore support native digital issued blockchain, what Pablo mentioned, could be the future, and therefore this should be possible. And if you would have a regime adapting to these kind of realities and digital space, that would help. A persistent system, so if we establish a 28 regime, in our view, it should be a kind of opt-in for companies. They can decide to issue national according Italian law or German law, but if they want to choose, because they are more cross-border and want to go in total Europe, then it should be kind of an optional, but being optional for the company, the systems should be staying. It should not be a sandbox or a kind of pilot regime as we saw it in the DLT pilot regime, limited for 3 years. That wouldn't help in our view. Compatibility, efficient coexistence and interoperability. We heard the term already from Pablo. That's important, that the different spaces, traditional and new technologies and new spaces are talking to each other and can kind of convey. This is also with regard to the forms of money, stable coins is in all, everyone's talking about stable coins and wholesale CBDC. So this is kind of the interoperability to have this across different networks, so to say. Ideally, without national law duplication, so the 28 regime could kind of go back to the relevant part for insolvency protection that is already done and safe. So it should not reinvent the wheel, but should use national law where it makes sense. And that would kind of reduce uncertainty and would allow for more speed and automation, especially if we look into the digital world. So therefore, in our view, this is worth to go further down the journey. We are committed to start this conversation and discuss it, not only in this fintech call for evidence, but also as a next step in the Eurobonds market. Yes, please. Yeah, so you ask a very difficult question. Obviously, we as regulated financial market infrastructure, we heard already we have different supervisors. We have the ECB, we have CSSF, we have BaFin. So we say as long as the supervisory processes are efficient and we get the licenses and we get the products to market, we don't care who the supervisor is. Yeah, so we are neutral in this. No? If the policymakers decide to give the mandate to centralized supervision, we heard already some proposals. The next SIU package could have some proposals on supervision. Then CCP, CSDs, and trading venue could fall under the bucket of ESMA. But in the end, that is not a priority for us. Who is supervising us? So in the end, that's the decision of policymakers. Sorry, can you repeat? Issue work. So that's already mentioned by the colleagues. No? The issuer has the free choice where he wants to issue under what law and what supervisor is fit for purpose. That's what I understood. Issuer choice, yes. Further questions? Comments? Good. Then I would hand over to.
Great. Thank you. Well, I think a big thank you for Euroclear and Clearstream for their presentation. So I'm just going to wrap up with, on behalf of Natalie, myself, and ICMA, just a few thank yous. Obviously, thank you to our great speakers today, Arno, Guido, Dan, Pablo, Sujata. Also, thank you to Torsten and Ravina for helping turn a concept into reality. Thank you also to other ICMA colleagues who have helped support today. Biggest thank you of all to you for coming today, and you've all earned yourself a drink and a mind map. Thank you.